Welcome to the Caplander podcast, where we dive into the dynamic world of private capital markets. Whether you're new to private market investing or a seasoned professional, this podcast unpacks the latest trends, insights, and opportunities shaping the industry. Featuring expert guests and deep discussions, Caplander is your go-to resource for staying informed and inspired.
Hi, Morgan. We're coming to you live from Miami. This is our second time that we've been together, and we're sort of the experts. We're going to do a recap of what we've had going on in the last week, because there's been a lot of activity with webinars and live speaking engagements.
Definitely.
You came to Miami for the LSX conference.
I did. So we're recording this on Tuesday, March 11th, and today we had an in-person panel. We kicked off, it was day 2 of the LSX Investival conference in Miami. They held it at the Miami Convention Center. I think it's still going on now, at least for another 30 minutes or so this afternoon. It's really a very nice conference. It's a hybrid of private companies, investment firms. We met a lot of executive recruiters too. So they have the service providers who are around. And it was nice the way that they had it laid out. Sometimes you go to these conferences and it's hard to find places to be, or there are too many places to be.
Yeah. So they had a combination of people sitting and having discussions with a service provider, investor meetings, and companies. And then they had 3 different stages, one for med tech, one for biotech, and one for sort of a health tech.
Right. And then they had the panels and they had times for the companies to present too. Right. So we were on the second panel this morning, and it was the 2 of us, and we talked about leveling up your compensation and winning strategies for life science companies.
Yeah, well, it really all comes down to a lot of the same discussions around what is current compensation, what are the trends. Everyone is discussing how long it's taking to raise capital. I know you spoke to a company yesterday who said it had taken them over 2 years.
Right.
But when they finally are raising capital, everybody wants to understand what happens with equity, refresh grants, option pools.
What if the valuation has changed with that new financing, if the valuation has shifted from where they were the last time they raised capital.
Maybe that's a good way to segue into the webinar that we did with Scalar, who is a valuation firm, because we had a great webinar with them, and we also had an attorney on from Cooley who discussed sort of valuations of the company stock, as well as it's really 2 different lanes was my takeaway. The valuation of the company stock and versus the valuation of the actual private company, like a post-money valuation.
Right. Yes. And I think that some of the nuances, we really started very broad, and the recording is actually also on our YouTube channel. And if you participate in our survey, you will see it on the platform separately. But talking about valuation gets thrown around a lot because it's a very fancy number to give people and say, well, the company's valued at $1.5 billion.
But that is different, because we did a debrief with Scalar yesterday, and I think it's important. There's a distinction between the valuation of the company versus the value, the strike price of what your equity is when you get an outside valuation.
I think that's something where getting into more of those details is probably going to be a follow-up session or 2, because you could have a lot of different experts to join. You could have bankers, you could have accountants.
But the real bottom line from that webinar is that if you are an employee and you get you get a strike price for the equity that you are granted, that the valuation of that isn't really indicative of the worth of that equity. That really is just a point in time.
Well, the equity is not really worth anything until there's some sort of liquidity event.
Right.
I mean, it's a number, yes, but it's not like a real number, like holding $1 in your hand going, this is $1 and this
right,
is...
But our variations on people's interpretation as to whether or not they think that is actually worth what the valuation is. And the optimal situation, obviously, is that the value is low, and then if there is a liquidity, or when there is a liquidity, that the value is high, and the difference between where you got it granted or purchased it and where it is worth in the market, what it is worth in the market, is a big difference, and that's where your wealth creation is. But
right.
That is separate and apart from what the post-money valuation is for a company. So
that's one of the questions that came up, was for companies that target a dollar amount for a grant, not a percentage, what would be the pros and the cons of that, or what would you recommend?
Well, the pros of it is that it gets people all excited because they think it's actually worth something.
Right.
And the con of it is that it's not actually worth anything until there is a liquidity event.
We really in our surveys and our data set, we track the equity for founders, non-founders, and then we also look at it as a percentage of fully diluted shares.
Right.
So,
Well, speaking of equity, Morgan, it's sort of exciting that I signed your stock grants certificates, or I'm signing them today, but I have them from the attorney. So that makes you an official Thelander shareholder. And at this point, that just means there are two of us, me and you. So
Right.
you've done a nice job and earned a piece of the company. And that's very exciting, being my daughter. So congratulations. Today is your day.
it's like the Dr. Seuss book.
Yep, today is your day. You're off to
Right.
great places. So
How many years did we read that book for birthdays?
we still quote that.
I
There's so much truth to it, actually. If you read these Dr. Seuss books, you actually realize we could put these in as comp strategies and comp philosophies, like
Right.
the waiting game. It's really hard.
Well, I think that's part of it too. On the private company side, is that a lot of people are really looking for the answers and for the comp consultants to be the definitive answers. And I think that's sometimes where it takes a little bit of massaging, because there really is not one way. There's data, which tells you what's going on with the market, but there's not going to be.
In my opinion, right now, it is very stressful for companies because the fundraising is taking a long time, and it is really putting pressure on compensation, on board discussions, on salaries, on hiring. And I think the companies that have raised money are obviously really good companies, because we read over and over that the venture firms have a considerable amount of what you call dry powder, which is money sitting, but it hasn't been deployed.
I think a lot of that money is being reserved for the companies, especially we've been at a number of conferences where the investors say we are long-term partners, especially in
follow-on grants.
Right. We are long-term partners. We are going to be there early. We're going to be early, and then we're going to be there to support the company through.
The investors are saying that it's hard to find good companies that they feel comfortable they want to invest in. So once they've already made an investment, then they feel comfortable that if a company is progressing. But I think with that, what we're seeing with clients is that they're looking for more guarantees around career structuring and where somebody goes when they're in an entry-level job to the next level, to the next level. But now, since things are slower, there's more strain around the progression.
There's a lot of people who have individuals in an office in a location, and there's also a lot of team members who are they're not required to be in the office, they're remote workers. And then there's the whole question of, okay, well, I have a comp structure, a comp philosophy for people who are in one area, but then what do I do about the other people who don't live in an as expensive region as where I'm headquartered?
Our data consistently shows that there are no differences for people who work remotely, and that remote jobs still for private companies exist, even though they have really required that everyone comes back to the office. They've required it, but they haven't enforced it.
There's other companies who feel that the strength of their workforce is also having remote workers, and that they bring people together for team building, but that they're not keeping everybody together on the day-to-day.
Yeah. So what was the other webinar we had besides corporate venture?
Well, the private company one is the one we just talked about. And then this other one.
Oh, the second one was the corporate venture one.
Corporate venture.
Right.
That one, I always find corporate venture to be interesting because it is a tough group to wrangle. But when you have everybody together, it's one way or the other. One way is that you have so many questions coming in. And then the other way is that the chat is crickets, but you don't see any of the numbers move. So people are not dropping off, but there's not as many questions back.
Well, the corporate venture firms are an extremely valuable part of the investment ecosystem.
Clearly.
And it gets said and printed. We've read it over and over. And the corporates are raising the money from the parent company, or given the money from the parent company.
Right.
And they are always looking for strategic ways to keep their compensation competitive with other investment firms that raise a fund. And that's really the biggest distinction.
There's also tension sometimes, or there can be tension with the parent company because their compensation is not necessarily, it's a different comp structure.
Right. And if the main question comes up all the time is, are these corporate venture firms looking for a financial return versus sort of a strategic
technology transfer too?
Right. So if they are not looking for a financial return, it is in conflict with the people who are on the corporate venture investment team, because they want to have some skin in the game. Because if they're investing, it's just by nature, an investor wants to have some kind of upside. And if they're not hunting for that, that's the nuance of a corporate venture firm, because they're not always hunting.
Right. Well, we look a lot at long-term incentives, and we can put it in the comment section of the recording too, is that our newsletters really dive into more of how the whether a corporate venture firm is on balance sheet or off balance sheet, how that structure impacts what long-term incentives are utilized.
So we've already talked about today the equity for private companies and then the other long-term incentives, which is sort of the equivalent of equity for a corporate venture firm. It does seem to be the more independent the CVC is from the parent company, the more independence they have in terms of coming up with a different comp structure. But there's no question right now that the lack of M&A, the lack of IPO, really the lack of any knowing is, although I have to say there was a woman today on the panel before us, and she was very positive about sort of what's happening. And I liked her take on things that right now, with everything going, we would be reticent not to discuss what's happening in the financial markets, that there has been a little bit of a downturn. But she really said, and I agree with her, that the downturn is something that we're just going to have to stay the course on, because with this, there will be growth. When that growth is going to happen,
right? Nobody knows.
Nobody knows. But
no.
I think part of why we're here, and we talked about this today on our walk, is that, the private markets are here to stay. Innovation is always really important. And no matter,
especially in the United States. And that's really one of the things that she said too. The United States is very innovation friendly, very private market friendly.
Right. No question. There were a number of firms there from the UK. And as we always hear, they have offices both in the UK as well as in the United States, because it doesn't really seem like any, and there was a lot of investors there from Asia. We were talking about an asset that was coming for a biotech company coming from
North Korea.
Right. I mean, we hear everyone lands in the United States for all of this. So from that vantage point, we Thielanders are here to stay, and really looking, I think maybe we should wind up with this. The number one thing that we really care about is survey participation and the quality of the data. And it's harder to see numbers really move when not much is happening in terms of both audiences, the investment firms, as well as the private companies, because we keep waiting for people to update data and make a change. But the reality is there's not a lot of change and updates to have right now.
No, and I think it's also on a bandwidth perspective is that, yes, taking a survey takes time, but it's also really results in a quality, comprehensive resource that allows you to make educated decisions.
But when the companies are really spending so much time trying to raise capital and make sure we hear
only so many hours in a day, and the reality is the capital is what's going to keep the lights on, and the compensation survey is obviously a valuable resource.
It comes, right? I mean, this is the way it is all the time. We feel things quieter, yet we are planting, and at some point there's going to be that aha moment. We had this last month where all of a sudden everybody was buying data and it was really crazy busy. So I think with that, for those of you that are listening, we're here in support, and we know that it's a long game, and that there are times where you have to really lean into your own infrastructure and make sure that you have the right service providers and support around you. And I think today's conference at LSX really shows that there is always movement with that, but it isn't happening as fast as anybody would like.
Right. I think a little bit for what's to come and what's next is we're going to have a couple more lunch and learn sessions that are going to deep dive on some topics that we've been covering and questions that are coming, and some exciting guests who will be joining us. So stay tuned for what's to come.
Thank you. See you, Morgan.
Bye.